Hello and welcome to this week's episode for SPY Trader Now's update. This is January 14th, 2023 update, and the SPY Trader Now portfolio, we did not make any trades during the week, so our portfolio remained flat during the week while the S&P 500 soared up. So I've changed the coloring configuration to show that we are now doing less returns than the S&P 500 buy and hold strategy. The S&P 500 buy and hold strategy is beating us by a good margin, by a 4% margin. So that's where we stand as of today. Our goal at SPY Trader Now is to beat the returns of the S&P 500, but on a week-to-week basis, that can be tough to do. We try to do it over our goal is to do it over a calendar year of 12 months. So we have plenty of time to go in order to beat this return, but now we have some catching up to do because we are behind compared to the S&P 500 buy and hold investor. With SPY Trader Now portfolio, we do a 3-position portfolio where we either have shares of the S&P 500 and we use the vehicle of the ETF with the symbol SPY, which is just the S&P 500 traded as an electronically traded fund, which is the same thing as a mutual fund, except with a ETF fund, you can trade those intraday, whereas mutual funds only allow end of day trading. And we also do SPY options, which would be calls or puts, and we also have cash. Cash is one of our positions, and we are currently in cash, residing 100% in cash. We start the year off January 1, 2023 with $100,000 capital, that's our portfolio starting capital, and this is where we're at right now. So we're at $365,000.80. That's where our portfolio sits. Okay, let's move on. So at SPY Trader Now, we are not buy and hold investors. We buy and sell and trade the S&P 500. So currently as of January 14th, 2023, our portfolio is up year to date of 0.37%. Now this here is a chart, a one-year chart of the S&P 500, and I'm going to go through the charts in great detail through the later on in this presentation. But here you can see the last 2 trades that we made were cash secured puts, and I can already tell you, spoiler alert, I'm going to be making another cash secured put, which is a conservative trade on Tuesday of next week, the first market day open. Okay, so last week the S&P 500 on a weekly basis, it closed up 2.69%. This is a 5-year graph of the S&P 500 with candlesticks here. This is the thumbnail. Each one of these represents 1 week's worth of trading action. And we closed at 398.50, just about the top of this candle, which is really good. The S&P 500 did a lot of technical advancements during the week, and I'll go through that during the presentation. So for the week, we made no trades. So we have no trades to report to on our trading spreadsheet. If you have not done so already, go ahead and click on that subscribe button, ring that bell to be notified of my videos when they're posted, and do me a solid and hit that like button to help me promote this video. You can go to my website, spytradernow.com, to sign up for real-time trade alerts, so when I do post a trade, you'll be notified via text and email. And also, you can go to spytradernow.com to see a full list of all the trades I've made for the last 3 years. This is the portfolio for SPY Trader Now for 2023. So we track our portfolio to see how well we're doing, and because we made no trades, our portfolio for the last week was flat. Again, we start the year off with $100,000. If you were a SPY buy and hold investor for 2023, you have done well over the last week, where they started off just above 380 and it's just under 400 right now on the price per share basis. And on this chart, this is a comparison analysis against our strategy against the SPY buy and hold strategy. So last week was just an amazing week for the SPY buy and hold investor, where they just shot straight up. It was just an incredible week while we remained flat because I did not take a trade. And I'll show you why I didn't take a trade during the presentation. So here's Jerome Powell, and he is the head of the Fed chair. And the last meeting, which was on December 15th, they raised 50 basis points the Fed short-term interest rate level. According to Forbes, in 2023, there's an expectation to have a terminal rate of between 5 and 5.5%. So we've got some more room that they want to increase the interest rates. The market calendar for the FOMC, the next meeting is on January 31st and February 1st. Definitely going to raise, I feel very confident they're going to raise a minimum of 25 basis points with a possibility of it going up to 50 basis points. According to the numbers from bankrate.com, I'll leave a link down below so that you can see that, we currently have an inverted yield curve. And what that means for the bond market is that on the 10-year Treasury rates, the rate that is currently at 3.61% is a lower rate, this is considered a long-term rate. These are short-term rates. The longer-term rate has less returns than the shorter-term rate. That's telling you that the bond market does not have a favorable outlook for the economy, for the economy in whole. It shows that we're going to be going into a recession. It's a precursor towards a recession. So this is a very negative information for the stock market, showing you that you have an inverted yield curve. In addition to that, you also have rising interest rates. 1 year ago, the 10-year yield was at 1.75%, and as of January 11, 2023, the 10-year was at 3.61%. So obviously that's a rising interest market. So from a bond market perspective, being in stocks right now is very risky in general. Now this is looking at it from a seasonality standpoint. So this here is the seasonality for the S&P 500 in the month of January. This is going back 20 years of data. There's a 50% chance that for the month of January we will be closing higher than when we opened the month at. Tells you that information right here. So how are we doing so far in the month of January 2023? This is a monthly chart. Each one of these candlestick bars is 1 month's worth of data. So currently we're in the month of January, and the market is up 4.2%. And there's only a 50% chance that the market will close higher than when it opened January. So there's a lot of risk here, because the market has already made a 4.2% advance. In addition to that, looking at the monthly chart, if you put a trend line in at the top of these wicks on these candlesticks, you'll notice that we are almost hitting that long-term resistance from a monthly standpoint. So that is negative, where we have room to go up, but there's a higher probability that we are going to go down, top out, hit this resistance level. Now here we are again with a monthly chart, but this is going back 20 years of data, so we can look at a very, very long-term time horizon. What we are trying to do, what we would like to do, I should say, is we want to make our money between this point here and this point over here. This is the easy money to be made when we're in a strong bull market. You can see that strong bull market has completely ended, where we are now in this declining trading channel, and we are at the top edge of this declining trading channel right now. We have not broken above it yet. So this is a resistance line until proven otherwise, and we break above it. So it's possible that we can tag this resistance line and then come back down. The MACD, moving average convergence divergence at default settings, is currently negative, but the histogram is showing positive advancement. Slow stochastics has already bounced off the 20 and come up and is above its signal line, but you can see its momentum trajectory has slowed. Now this is on a on a monthly standpoint. So what we're going to do is we're going to go from a long term to an intermediate term to a short term chart. So this is a long term chart. With all of this data, I'm going to put it down as a neutral stance. With the intermediate term chart, which is a weekly chart, each one of these candlesticks represents 1 week's worth of data. Again, you can see this long-term resistance line that I have drawn in here, and we are very, very, very close to tagging that long-term resistance line. Does that mean it's going to tag it and come down? No. The market's going to do what it wants to do. As a matter of fact, if you look here at the MACD is not only above its signal line, which is positive, but in addition to that, when it was coming down and getting towards its signal line, it decided, no, I'm not going to do that, came and turned up, and you can see the distance is gaining a bigger distance between the MACD line and the signal line. This is an extremely bullish condition, showing you that there is a lot of strength in this market. So there's a good likelihood that we are going to go above this long-term declining resistance line, but then we have another resistance line right here, which is the old high, which is about 410 on the S&P 500. That's another obstacle that the S&P 500 has to overcome in order to make advancements. So there's a lot of headwinds that this market is up against. So in the intermediate term chart, I'm going to put this down as a neutral to bullish stance. Bullish because of the MACD, basically. Looking at it on a short-term time horizon, this is on a daily chart of the S&P 500 going back 1 year. You can see that we are currently in this upward trading channel, and we're still in this channel until this channel is broken, and this channel is not broken. So it looks like it's going to stay here. But when we come to the old highs, we have a total of 2.8% from our current level to how much upside advancement we have before I'm expecting some type of a pullback. Not saying a big pullback, it's that the amount of the pullback is unknown, but some pullback. So this is how much room we have to advance maximum, I'm predicting, prior to some type of a pullback showing its face. So the MACD has plenty of room for advancement, but the slow stochastics is already above the 80 line and showing a decrease in momentum. So this is topping out, and this is most likely going to come down, which is going to indicate some type of sideways action for the S&P 500. So this is on the short term. So my stance is that it's a bullish stance, but at 400, which is just right at this downward declining resistance line, and also at 410 is two obstacles that the S&P 500 has to overcome. Now looking at it from the VIX, or the fear index. Now when the VIX goes down, the S&P 500 goes up, and the VIX had a waterfall decline. Look at the thumbnail. This is the last week's action for the VIX. The VIX just had a waterfall decline. This is why the S&P 500 had such a great week. The fear is coming out of the market. The MACD on the VIX has gone negative, where it's below its signal line, and it looks like it has a lot of room to come down before it tags this support line. So from the VIXs and the fear index, it looks like this market is, I wrote it down here, bullish stance, but it was such a fast drop for the last week with this waterfall decline that it leaves risk for a bounce up. But no, I don't predict much of an advance like this. I expect more sideways action. Now this here is a 1 year chart for the S&P 500, but this is on the Think or Swim platform, which is my broker, which is TD Ameritrade. And right now we are at the 200-day moving average and the +1 standard deviation. When you look at this chart, the -1 and the +1 standard deviations are in pink, and the -2 and +2 standard deviations are in gold. The +1 and -1s, about 67% of all trading takes place between the -1 and +1 standard deviation. And between the -2 and +2 standard deviation, about 95% of all trading takes place between these two parts. You can see right now that we are at the +1 standard deviation. And the last time we did that throughout the last 12 months, it just went above it briefly before it came down. Here, briefly, it came up, came down. Briefly came up, came down. Here, there was a little bit of a spike up, but just one day before it got back down below the +1 standard deviation. So there's a lot going on here telling me we're in the last 12 months, every time it's hit this level, it has come down. Now, eventually, this is going to change. This is going to come up, break, and it's going to hold. We just don't know exactly when, but it hasn't done that yet. Your MACD is positive. Your slow stochastics is positive. So I'm writing this up as a bullish stance, but at the +1 standard deviation and at the 200-day simple moving average resistance levels. Now here is the same think or swim platform, but instead of going back 1 year's worth of data, we are going back only 3 months. Each one of these candlesticks represents 1 day's worth of action. So it's a 3-month, 1-day chart. Now, here you can see that we have broken above the 200-day simple moving average, and we have closed above it. This is where we have closed, 398.50, which is right here with this body, the top of the body of this candlestick, not the wick, but the top of the body. That's where we closed for Friday. This is a bullish stance. Now, when you look at the standard deviations, the midpoint is this dashed green line. We're just above the midpoint. We have plenty of room to go on the shorter term time basis before we tag the +1 or even +2, which you can see we have done recently, standard deviation. So we have room for this to go up or go down. But so there's plenty of room here for it to go. But overall, it's a bullish stance. We're closing above the 200-day, the MACD, and the slow stochastics are all bullish. So how do I want to play this market for the following week? So as of January 14th, 2023, my market summation according to SpyTrader Now, the market has room to go higher, but the max upside is about 2.8% higher than its current levels. I don't see any major sell-off next week, so pullbacks should be controlled. I will do a cash secured put on Tuesday when the market opens. The markets are closed on Monday for Martin Luther King Day. SPY is currently at 398.50, and I will do a short-term trade with Friday 1/20/23 as the expiration date with a strike of 392. The premium currently is showing 97 cents, which when you put into the cash secured put calculator is about 30% annualized. I will only go one contract, even though the portfolio has more cash. I just want to put about 40% of the portfolio in this trade, which is going to leave me cash. If there is a pullback, then I can put on another cash secured put trade. I can right now I'll max out with about 2 contracts because I only have a $100,000 portfolio. In each contract, which is 100 shares, is approximately $40,000 required to have your cash ready in case you get exercised. Now, the benefit of going with the cash secured put is that we are going to get a decent return because it's going to annualize out to 30%, which is if you make 30% on an annualized basis, I am a very happy camper with a 30% annualized return on investment. But if there is a pullback, I am going to leave myself some room to get the shares a little bit cheaper than its current price. About 1.8% lower than its current price is the discount that I'm going to receive. In addition to that, I have a break-even cost here of $391.03. With SPY trading at 398.50, that gives me plenty of downside protection just in case after the trade that the market turns around and begins to come down. So I won't lose money until I get below the $391.03 mark on the S&P 5 on the SPY. So that gives us a lot of downside protection, and it gives us plenty of cash in case we want to add to our positions. So this is where I currently am. I plan on positioning myself on the next open market day, which is Tuesday. what I'm going to do is wait for the market to open and then update my calculator here for the cash or put calculator to make sure the numbers still make sense. And if the numbers still make sense, go ahead and execute the trade. This is what the trade looks like, by the way, on the Thinkorswim platform. All I have to do is hit send if the market was open, and it would execute that trade. But right now the market's closed, so I'm not going to hit send. I'm just going to sit here and wait until the next market open day. That is going to conclude this week's video for Spy Trader Now. If you have not done so already, go ahead and hit that subscribe button so you can follow me to see how well my portfolio does in 2023. Ring that bell to be notified when I upload a new video, and do me a solid and click that like button to help me promote this video. I thank you, and I wish you good trading.